As we approach Q2, I'm revealing the top 5 stocks I'm investing in. Now, the market has been on a roller coaster ride since reaching record highs in early February. Since then, it has largely trended bearish, with indices dipping to critical support levels. However, could this be a pivotal moment when the bulls regain control? Let's start with a heavyweight, Warren Buffett's Berkshire Hathaway. There's been so much talk about Buffett stockpiling his largest cash reserve ever, preparing for a potential market crash. But here's what's interesting. Despite the indices having a tough month, Berkshire Hathaway has been setting record highs. The stock has climbed almost 100% since its 2022 low. This year's price action saw Berkshire Hathaway climb 17% from January's low, breaking out of a 6-month consolidation period. With the recent correction in the broader market, Berkshire Hathaway has pulled back around 4.5% to retest the important $500 round number. What we ideally want to see now is this level hold, followed by a bounce and a breakout to new all-time highs, potentially targeting $600 through Q2. The next breakout will be critical, as it will allow us to add more positions to what we already have in our portfolio. It's worth noting that Berkshire Hathaway ranks 8th on the list of the world's most valuable companies with a market cap of just over $1 trillion. It's the final company on that elite trillion-dollar club before the rankings transition into the billion-dollar range. Next up is MasterCard with a market cap of just under $500 billion, making it the world's 17th most valuable company. MasterCard has climbed approximately 110% from its 2022 low to its all-time high before the recent correction. After every big move, it's completely natural for a stock to consolidate. And that's exactly what MasterCard is doing right now. It's formed resistance around $580 and has weakened about 6% with the recent market pullback. What's impressive about this 6% decline is how it demonstrates MasterCard's robustness when compared to the much larger corrections we're seeing in the major indices. This resilience isn't unique to MasterCard. We're seeing similar strength in Berkshire Hathaway and the other stocks I'll be discussing. MasterCard is now sitting at last year's high, which creates a perfect support level for bulls to step back in. A move up in the indices and the broader market will definitely help the cause. I'm waiting for a breakout and new all-time highs to add more positions to what I already have in my portfolio. The next stock on my list is Palantir, which has become something of a social media darling, particularly since November. That's when it broke out of its 4-year consolidation since its direct listing in 2020, climbing an impressive 180% and setting record highs along the way. It was that kind of movement that got it added to the Nasdaq 100 at the end of last year. However, since reaching its all-time high at $125, the stock has tumbled around 32%. It's now filled the gap that formed during the gap up on recent earnings, trading around $85. In the interest of full transparency, I should mention that I've never held any positions in Palantir. I typically prefer stocks with a solid history of trends, which Palantir doesn't have as yet. However, the recent move up since November, if it repeats, could tempt me to test the waters with a small position. For this to happen, I need to see a move back up through $100 and then a push through $125, the current all-time high, with a confirmed continuation pattern like a bull trend, for example. If we see that develop in Q2 and I have risk capital available, Palantir will move from my watch list into my portfolio. Despite its recent pullback, Palantir still ranks as the world's 67th most valuable company with a market cap of just under $200 billion. Okay, next up on my radar is T-Mobile US with a market capitalization of around $303 billion. T-Mobile stands as the 34th most valuable company globally and holds the impressive title of being the largest communications company in the world. This stock has surged an impressive 162% from its 2022 low to reach its all-time high just last month before undergoing the recent correction. It gained an impressive 30% from January's low, breaking out of consolidation to set all-time highs. Now, despite all the market volatility we've been seeing, T-Mobile has shown its remarkable resilience, trading within a tight 7% range in recent days, even as broader indices declined much more dramatically. I'm watching for the next breakout, which could see T-Mobile target $300 in Q2 offering some excellent entry points. But patience is definitely key here. It's worth waiting for that clear move before jumping in. Okay, next on the list is MasterCard's rival, Visa. The interesting thing about these two is that they tend to move together. So with MasterCard already on our radar, it's only natural to keep a close eye on Visa as well. While it's a cheaper stock on a per share basis, Visa is still a giant company with a market cap of around $666 billion. This makes it the world's 15th most valuable company, slightly ahead of MasterCard, which ranks in at 17th with its market cap of just under $500 billion. Visa has climbed around 105% since its 2022 low to this month's all-time high. Like all the other stocks I mentioned, it's also been hit with the recent correction. But again, the decline has been tiny compared to the broader indices, pulling back only around 7%. There could still be further weakness ahead, but the stock is holding remarkably well. When looking at these stocks collectively, you get a much more complete picture of whether the stock market is truly crashing or not. The major indices are weighted, so when big tech struggles, the indices tend to struggle as well, giving a somewhat skewed perspective of the market. But that doesn't mean all stocks are having a hard time. Many of the lower weighted stocks are holding well and may soon start leading the indices to new all-time highs. When Visa breaks out and sets record highs, that will be my entry point. I'd like to see Visa target $400 and beyond in Q2. Now, finding reliable stocks like these should be part of your weekly routine if you want to consistently earn in the stock market. Watch this video to see the routine I use to achieve an average of over 30% returns per year.